Good afternoon, everyone. My name is Erica Silva, Marketing Director at Security First Credit Union. We welcome you to today's Savvy Money Lunch and Learn webinar hosted by Security First Credit Union. We're thrilled to have you with us as we explore the valuable features of Savvy Money Credit Score, a free member tool accessible through mobile and online banking. Today's speakers are going to be Emiliano Jimenez. He is one of our Security First Credit Union Business Development Officers. Please note that all guest mic and cameras will be off during the webinar. If you have any questions, kindly add them to the Q&A chat and they will be addressed at the end. All right, thank you for joining us. Let's go ahead and get started.
Hi, good afternoon, everyone. It's very good to be here with you all today. I'm very excited to share all the incredibly helpful features that SavvyMoney has to offer. So, Credit Score, powered by SavvyMoney, it's already an existing tool that's available to all of our members at no extra cost. We have organized this webinar to share with you all the amazing possibilities of SavvyMoney. And again, it's more than just a credit score tool. It puts you in charge with several features anytime, anywhere. SavvyMoney is a tool that's integrated into online banking platforms, both mobile and desktop versions. So it allows you to pop in whenever you want, wherever you want, to check in on your credit score, your credit report, your credit accounts, open or closed, inquiries, and exclusive offers as well. There's many different features and ways in which SavvyMoney can help you stay in control, and it helps you also make the most out of your credit worthiness. Some of these features are real-time scores, detailed credit report, score simulators, monitoring alerts, personalized offers, and filing disputes. So on these, the real-time scores, what we mean by that is that you're able to refresh every 24 hours. So every time that you refresh, it's the score in real time. It's not an estimation, it's not what it was yesterday or the previous month. It's what your score is at that exact point in time when you refresh. The detailed credit report, it has everything you need to know. It has your accounts, the names, the numbers, the balances, your limits, payment history. It has all your information that you need to know to make sure that your credit report is accurate and that it belongs to you. On the simulator, it's also very useful because you can check, let's say I want to close my oldest credit card or I want to close my newest credit card because I didn't like it. So you can actually check ahead of time before you do it to see how it can affect your credit. Or if you're trying to cut your balance, one of your balances, let's say you're carrying $1,000 and you want to bring it down to 500, you want to see how that'll affect you. Or let's say maybe you're not planning on making your next payment on time. How is that going to affect you? That kind of thing, right? So monitoring alerts as well. Let's say you don't want to use your credit, you can set up alerts for inquiries. That way, you know, if you get an alert for an inquiry, you know that that was not you because you're not actively using your credit at this time. Also, personalized offers. So we combine the information that we have from SavvyMoney as well with your membership information to give you what would be best for you in regards to security first products. And then also file disputes. So on my other workshops that I do where we talk about credit, I do always recommend to file disputes with all three bureaus if all three bureaus have incorrect information. Well, one very convenient thing about SavvyMoney is that if you find one thing that doesn't add up that you need to file a dispute for, you can just file it through SavvyMoney, which will go to TransUnion. And if TransUnion has a finding that they need to correct, they will actually directly communicate with the other two major bureaus. So it's also a tool that helps you a lot with convenience. Now, I'm telling you all about SavvyMoney, but how do I actually use it? How do I actually get there? Like I mentioned earlier, SavvyMoney is integrated into Security First secure online banking environment. So it makes it easy to access, it's convenient, and it's safe for all of our members. The image that you see here mimics our online banking platform. And you will see and find the credit score tool on the right-hand side. So this right here, it has a name, James Noyes, and it has an account information. So this is what our desktop version of the online banking looks like. And on the right-hand side, you'll see my credit score right here. It's in full color, it's animated to make sure that it grabs your attention. So prior to enrolling, you will see what is called an unregistered view. So it previews what the tool has to offer, like scores, reports, and savings and monitoring. And all you have to do to sign up is click right here on Show My Score. Now, if you're on your mobile device, this is what you're going to see. You're going to see your accounts. You're going to see the edit option, some security first ads and recommendations. And then over here, you're going to have quick links. And on quick links, how do you know that you haven't registered yet? Because you don't see your credit score right here and you don't have any notifications. It just says my credit score. And right here, all you simply need to do is click on my credit score as a first time user, and it's going to ask you to enroll. And if you're already enrolled, it'll just take you directly to SavvyMoney. Now, when you click on enroll, there's a couple of simple steps that you need to follow before it actually lets you in. It's going to do an ID verification and terms of service. So it's the term agreements, it's an authorization for continuous credit monitoring. So it's letting you know that we're continuing, or that it is continually monitoring your credit, and that these are soft checks, meaning these are not hard inquiries and will not affect your credit score at all. So all you have to do is click right here on the box and then click continue. So on these terms and conditions, on this opt-in tool, all you're going to have to do is give the permission, or that's exactly what you're doing. You're giving the permission, and it will ask you for your social one time to verify your identity. But after that, you will not need to provide it ever again. Now, moving on to what the registered view looks like. So on this previous slide, I told you that this is what it looks like in the unregistered view. This is what it looks like once you have registered. So we're not in SavvyMoney yet. We're still on the online banking platform. And if you're on your phone, you see how here it has a little number 4. That's the amount of notifications that you have on my credit score, and then it shows you your credit score. So when you see that, it means that you've already registered, that you're already an active user of SavvyMoney. All you got to do is click it and it'll take you right to it. And on this right hand side as well, it's not showing you the features of SavvyMoney anymore. It's actually showing you your personalized information and recommendations. So it has there an auto loan recommendation. It's telling you show my full report. It has the color coded recommendations there, the rating as good, and your score. So when you actually click on show full report or my credit score, this is what you're going to see. This is the My Credit Score SavvyMoney main screen. And as you can see, it has a lot of information in it. It has a lot of tabs that you can play around with to see what SavvyMoney has to offer. And that's exactly what we're going to do right now. I'm going to bring over a demo website where we're going to be able to navigate through SavvyMoney in real time with this test account. So right here on the top, we have 4 tabs. So we're going to stick to credit score and report. Under credit score and report, you see a personalized offer right here. And then this is going to be your rating. So it's giving you a rating of good for having 753. In order to get to excellent, you need to have a 780 or higher as your score. It tells you the last time that it was updated, which is today. And then also gives you the version of your score. So the Vantage Score 3.0 is arguably the most accurate consumer-facing score. So what does that mean? It means that from a score that you're actually able to obtain as a buyer, as a consumer, it is as accurate as it's going to get. Because most of the other credit score models are more for the financial institution use, not for consumer use. So this is the most accurate consumer use score. And it also tells you when the next update is available. So this was updated 2 hours ago. So it says 22 hours left for the next update. And then here you have 4 different recommendations tailored to your profile. As we go down, we're going to see 4 other tabs as well. All 4 of these tabs are under credit score and report. So they're all part of the same major score and report area. We're going to start with rating. If you click on rating, It says score rating good, and it tells you a little bit of a description of what that means. It says that this represents your credit worthiness based on your score, and it says that the bureaus examine aspects of your credit and debt history. Now, it also gives you some recommended actions. So these are some highlights and some actions that you can take. And it also tells you how far away you are from the next tier. So how do you jump from good, or how far you are from going from good to excellent? You're 27 points away. In here, you also have your credit score history. So it tells you have you been doing month by month in the past and your average score. I know you can see here score simulator, but we're not going to go there yet because this is just a another link that leads you to this over here. Credit score goals is here, but you'll also see it over here on the bottom where we were at. Now, we have the back button where that we can navigate to go back to these little tabs right here. But I don't know if you noticed that when I went into score rating into good, those same 6 tabs are actually here. So there is no need to navigate back and forth. You can just click through them and go and see all of them one by one. So from score rating, we're going to move to payment history. And in payment history, it tells you that 40% of your credit score is based on your history of on-time payment. In this profile, is saying that the history is good because all the bills are paid on time. It does, however, still have some recommended actions. And these actions are going to change depending on your personalized history. It also gives you highlights of your history. So it's saying you have 17 open accounts, paid on time, 0 collections, which is always good. You want to keep those collections at 0 because those have a very heavy negative effect on your score if you ever do get one. And then also 0 late payments in the past 6 months. Those can also carry a lot of weight on your score if you ever do get one. And it also says it's been 13 years and 1 month since you've had a delinquency. So that also carries a lot of weight. And then performance chart, this one, because it's a test site and it doesn't fluctuate, but you'll see a more tailored performance chart when you do sign up on your own. From payment history, we're going to go to credit usage. Now, before I actually jump into usage, I want you to see the colors here. There's a color scheme going on here. This one's like a light green. This one's a dark green. This one's a yellow. So the yellow means that it's not doing so good as the other ones. You see how it says here, grade C on the payment history, which is where we were at right now, grade A. So it gives you a letter grade as well, kind of like when you were in school. And that just makes it easy to tell how well or how not well you're doing. So this person specifically is not doing very well. They're not doing bad, but they're not doing great either. And 20% of your credit score is based on how much money you've spent on your cards and accounts that have limits. So this person has spent 99% of the balance on one of the cards, and then 87% of the balance on another card, and then 82% on another card. And they just have one card where they're under 21%. So it says here you're using $12,570 out of your $16,500 of your total credit limit. That is a lot. That is very, very high usage. If you want to have good credit or maintain good credit, you want to make sure that your credit usage is below the 30% mark. That is the key right there. No more than 30%. The only reason why this person still has good credit, even though their usage is very high, is because every other part of their credit is also very high. They're getting A's in all the other ones. But if this person were to have credit usage below 30, they would probably be more on the excellent rather than the good. Because remember at the beginning, their credit rate was good, not excellent. So that's probably what's affecting them here. And you're going to see that in the recommended actions. Kimberly, your credit utilization is at 76%. Reducing it to 50 or less could help improve your score. So there you go back again to those recommendations. And then it also gives you your card usage history on a month-to-month basis. From usage, we're going to go to mix. So on account mix, Kimberly gets an A. 11% of your score is based on the mix of your revolving and installment accounts. And then on the recommended actions, it says you currently have a good mix of revolving and installment accounts. Try to maintain a diverse mix of debt accounts. And what is a mix? What is this difference in revolving and installment accounts? So there's different types of debt that you can apply for, that you can qualify for, and that'll give you a good balance. So, for example, Kimberly has real estate, she has auto loans, she has student loans, credit cards, and other. And inside other, you'll probably see things like signature loans, personal loans, that kind of thing. And she has zero collections, which is very, very good. And in categories, it breaks them down. So she's doing great because she has 12 installment accounts, she has 4 revolving accounts, and she has 0 collections. Now, from here, we're going to move over to credit age. 21% of your score is based on credit age. So as your accounts get older and you maintain them in good standing and healthy and paid on time, that will also help your credit get stronger and with a higher score. It's telling SavvyMoney is telling Kimberly that the average of age of her credit is 12 years and 4 months. And she has her oldest account at 17 years and 4 months. So it's telling here to keep it up. This really helps your score. Try to keep any credit cards you have active by making a purchase on each one every few months. Inactive accounts might get closed by the lender. So if your oldest account hasn't been used in a few months, you might just want to go and get some ice cream, maybe put some gas or something like that, just to make sure that you're keeping it active. And then we're going to move over to inquiries. So Kimberly has 0 inquiries in the past 2 years. That's why nothing shows on here. And 5% of your credit is based on the number of recently opened credit accounts and credit inquiries. So if you do end up getting an inquiry here, it might not affect you too much. Usually when you have more than, let's say, 3 or 4 over the span of 2 years, that's when it really starts kind of hitting you a little harder. But there's also something else to keep in mind. When you are considering an auto or mortgage loan, all inquiries made within a 14 days time span for the same type of loan are counted as just one inquiry. So it's best to shop around. So you can keep that in mind too. So we've gone over all of these, the rating, history, usage, mix, age, and inquiries. And now we're going to go back. So that's everything under score analysis has already been looked at. You can see here your score action plan. It's this same tab here. So we're not going to touch that for now. And you also have the goals. So this is also part of the credit score goals. So we're going to leave those alone, but I do want to look into this right here, the financial checkup. So this financial checkup tool is very good. It's very useful because you can edit your checkup and you can enter your own information as to income, expenses, savings, and it gives you your net worth as well. And you have a budget breakdown. So you have your actual budget percentages, you have your target percentages, and then the amount in dollars. And then it'll tell you how you're doing. So here, the wellness score is fair for Kimberly. So she's not doing bad, she's not doing great. There's room for improvement for her. So how does this look like? We're going to edit my checkup. It says, yes, edit my checkup. So savings and planning, what is it that you want? I want to build my savings. Let's say. Savings and planning, is your financial situation getting better over time? It feels like I'm running in place. Everything I earn goes towards maintaining my current situation. Let's leave it there. Financial security, let's see. Savings and planning, how many people are in your household? 3. What is your annual household income? 160. Again, this is already pre-generated information from the test site, so we're just going to leave it as is. I'm just trying to show you the options of what you can see here. So do you have an emergency fund for unexpected expenses like home, auto repairs, loss of a job? And then here you click whichever one fits you the most. And then do you have plans for a specific financial goal? And continue. And then you move over to financial security. Do you contribute to a retirement plan? Contribute when I can. Have you protected yourself and your family with health insurance? There's all the different options here. Yes. Have some health insurance or minimal or not at all. Have you protected yourself and your family with life insurance? There's also those options there. And then your monthly budget. I will and have a power of attorney. I only have a will. I only have a power of attorney. So it takes a lot of different things into consideration, not just necessarily your income and your expenses. So it's a very, very well-rounded financial checkup to see how you and your household are doing. And then it'll ask you about your budget, how much money you want to put into savings or you actually put into savings. This is where we go to the expenses part. And you can break it down into all these different options, and it takes some of the information that it already has and you can add your own. So for example, groceries, your own calculations, discretionary spending, dining out, entertainment, health and fitness, so that you can really get a true budget and financial health checkup. And you can come back and do this every couple of weeks, every month, so you can keep up with how you're doing financially. Now, from here, we're going to move to the actual credit report. And this is what I was talking about when I said that you can see it in full. You can see it in full online, or you can download it and you'll get a PDF that you can save. Every account that you see here is going to have the current balance, the utilization, when it was last updated, a name. And if you click the arrow down, you have a little bit more details like the highest balance, the limit, the monthly payment, and the payment history. And you can do that with every single account. If you scroll down a little bit more, you're going to see the real estate account with the current balance, the percentage paid off, payments as well. You have your auto loans accounts, you have your student loan accounts, other loans like a personal loan, zero collections, your inquiries, and your public records. And now this part right here is very important. Why? Because, oh, let's close that. Right here, it has Kimberly's name, her current address, previous addresses, date of birth, and employer. Let's pretend that this is you and me. And if I see something here, let's say an address that I've never lived in Arizona, I've never lived in Utah, I wasn't born in 1980, or my ex-employer is, or my employer is not X. Those are red flags that let you know that you need to start a dispute. And then when you start a dispute, it'll take you to the TransUnion website. And again, like I mentioned, you submit your dispute to TransUnion, and if they do find something, they'll forward that to the other two major credit bureaus for you. So that's very convenient. We have the score simulator. So on the score simulator, let's say you want to get a new loan, like an auto loan for 25, and it'll tell you it's going to go down. But remember, whenever you sign up for a loan, you always get an inquiry. So inquiry on file from a credit application. So that's more realistically how much your score is going to go down. Or let's say balance increase. Let's say I want to spend $5,000 on a trip. Score is going to go down. Let's say I want to pay off all my card balances. Boom, 20 points. It goes up 20 points. I want to close my oldest credit card because I don't use it anymore. It's not convenient. It's not up to my standards. It's going to go down 5 points. What if I'm about to miss a payment, or I just have to make a difficult decision and there's one card that I can't pay? That card that you can't pay is going to drop your score by 40 points. Now, if you do that 2 months, you see that big difference right there, 132 points. So it does take a lot of damage because the recency and the recency of a negative reporting is very, very heavy on your score. And also because your payment history is one that carries the heaviest weight, it's going to make it drop even more. So it's very, very important to keep your payments on time all the time. And then we're going to go to goals. So here you can say, I want to have a 790. So it tells you the difference 37 points, what your progress is from when you set your goal originally, and it'll give you some recommendations on how to get there. Now from here, this is everything that you can see in credit score and report. This tab right here on the top. From here, we're going to move to loans and offers. So these are all the personalized offers from the Security First products that we have to offer you. So we have auto loans, personal loans, mortgages, home equities, and vacant lots. And it'll put them all together on the recommended, or you can go item by item to see a little bit more information about each one. So for example, our intro rate of 3.25 over 6 months on our credit card, and the regular APR of 11.5 for this specific person. That may change depending on your credit worthiness. Also our auto loan rates. So our lowest auto loan rate right now, it's the 5.7 at 60 months. So it tells you there, conveniently apply now. Also on the personal loans, it'll tell you what the rates are, what you may qualify for. On our home loans, we have a mortgage, we have home equities, vacant lots. Also on multi-unit properties as well, we can do up to 4-unit investments too. And then deposits with our share certificate specials as well. Now from loans and offers, we're going to move to alerts. Like I mentioned earlier, alerts are very, very important. You can set up all the alerts, new alerts, credit updates, monitoring alerts, and you can keep up with these and just mark them as red so that you don't have those notifications there. So whenever a new one comes in, you'll know it's not just the same old one that you had seen. Now, resources. This is very important. Sometimes we're looking into doing something with our credit or just with our finances. And you're looking for more information, reliable information. Where do I go? Who do I believe? You know, we live in an era where there's just information overload everywhere. So with SavvyMoney, we actually have a collection of resources that you can go to. So if you click here on View All under Your Money, it takes you to the SavvyMoney website, and you can see all the different articles about personal finances. So from protecting your kids from identity theft to help with credit utilization, refinancing your car loan, is now the right time to refinance, quick ways to cut your debt, and many other things. So reliable and highly informational. And this is pretty much SavvyMoney in a nutshell. Now from here, I do want to show you what it looks like on the mobile app. So everything that I showed you was on the desktop version. I do not have a demo for the mobile app, but I do have these screenshots right here. So as you can see, this is where you start. You'll click on my credit score and it takes you to the main interface of SavvyMoney. And it's very similar. I know the screen looks different. It's more longer, taller, but everything else is pretty similar. So you have your score, your offers, your alerts, your resources. You have your analysis in the bottom with the score rating and the payment history. You have the report tab, which you still can download through the mobile app if you need the PDF. You have the simulator tool. If you click on report, it shows you the quick summary on top. And then you have the actual full-on credit report with download report option, and then your offers as well. Everything is there. Here, you still also have access to the simulation tool on the app and the download report. Now, from here, from the mobile version of the app, I want to jump to something else. So yes, we've gone over the tool and how to use it and everything that it offers and how to get there and what it looks like. But why should I use it? Why is it that I need to keep up with my credit? Why is it that I need to do all these things, go out of my way? My life is already busy enough with kids and work and everything else that I have to take care of. Well, credit is important for several reasons. The first one's going to be borrowing power. Whether it's for mortgage or auto loan or credit cards or any type of credit usage, they're going to assess your credit worthiness. So a higher score usually means better loan terms, like lower interest rates or higher borrowing limits. And now interest rates, your credit score is often differently directly influences the interest rate that you receive on all loans, mortgages, personal credit cards, and the higher score can lead to lower interest rates, saving you money over the life of a loan, which we're actually going to go over. I'm going to give you some real numbers so that you can see what the impact of interest rates and borrowing power can have on your life. Access to credit. So we're talking about maybe a loan being more expensive or maybe being able to borrow more. But what about being able to borrow at all? A good credit score increases your chances of getting approved for credit cards, loans, and other financial products. So it opens up more options and better deals. So again, it doesn't promise you that you're going to get approved if you have a good score, but it does increase your chances. Insurance premiums is also a very important one. Here in Texas, we all must have at least a liability auto insurance. And if you're financing your vehicle, you need to have the full coverage. And some cases, insurers use credit scores, soft pools, to determine premiums for auto and homeowners insurance. So a higher score might lead to lower premiums on your insurance. Now, going back to interest rates and borrowing power. These are four examples, and I want to give you the details on this example because there's an idea that I'm trying to share. So all these loans, these are examples of a loan or different loans, but they're all $25,000. Every single person here, let's pretend these are four different people, they're all borrowing the same amount, $25,000, and they're all borrowing for the same length, 72 months. The person with good, excellent credit gets a rate of 5.74, which is slightly higher than our lowest rate right now here at Security First. So this 5.74 APR ends up costing this person $4,682 over the life of the loan. And it's a payment of 412. Not too bad, right? So right here, 5.74, and the total payments, so that the total payment is the interest plus the 25,000. So this person ends up paying $29,682 for this car. Now, next person. This other person, their credit is not great, is not bad. It's kind of like in the middle. So they end up getting a 1099. Now, this is not necessarily what you'll get if your credit is not great or bad. It's just an example. You could get an 11, a 12, a 13, 14. It really just depends. But this is just for visualization purposes. As you can see, the total interest more than doubles. It's now $9,409 just of interest. The payment goes up about $65, and the total payments adds up to $34,409. So yeah, that $25,000 vehicle suddenly got very expensive. Now, for somebody that has challenged or bad credit with Security First as a credit union, by regulation, the highest rate we offer is a 1799. Right? So we actually do a very, very good job at protecting our members who have challenged their bad credit by giving them a rate that is still somewhat manageable compared to other rates. And I'll explain that in a little bit. But this rate of 1799 means that this $25,000 loan over the 72 months that we said is going to last generates a total interest of $16,351. And the payment goes up to $574, making this $25,000 car costing $41,351. More than triple what this other person is paying for that same vehicle. Is the same car, it's the same loan, it's just more interest. Now, this is with a credit union, with Security First, the highest rate that you can get. When you finance with a bank, banks don't fall under the same designation, or credit unions, they don't have those same limits. So banks that finance vehicles for people with bad or challenged credit can offer you rates similar to this right here at 29.99% APR. And I'm not exaggerating. I have seen loans like this one before. So somebody that finances $25,000 vehicle at 72 months, the interest is more than the car. $29,000, almost 30, 29,799. Ends up a $25,000 car ends up costing $54,000. That's how much of a difference your credit can make in your life. Not taking care of your credit can have very real, very tangible, a very tangible effect on your life and on your financial stability. So it's very important that you take care of it as much as you can, that you work on it, and that you actively manage it by using SavvyMoney, which is already integrated into the Security First app. You don't have to download another app. It's not gonna take away more space from your phone. It's already convenient. There's no extra login or passwords that you need to remember because it's already in your Security First app. So it's very convenient. And again, it's completely safe. Uh, we don't sell your information to anybody. It's all stays in house. We try to protect you as much as we can. So it's important and it's useful, and it'll be good for your finances to make sure that you set up your goals and you try to push your credit as high as you can. Now, a continuation of this different kind of visual or a different kind of example is what other things can come in play or what other benefits can good credit have? When you have good credit, it can help you with employment opportunities. So the first example is going to be the financial institution industry. Whenever you work in financial services, the first thing they do is run your credit. And if you have bad credit, sometimes that can disqualify you. Even if you're qualified for the position, they won't consider you if you don't have good credit because it's about reliability. And I'm sure other industries do that too. Or sometimes if you are battling it, or if they can't decide between you and another candidate, having a better score or a better report or a cleaner report can make the difference between those employment opportunities. Also, rental applications. If you're trying to get an apartment or a condo or anything like that, that you're trying to rent it out, sometimes they run your credit and they look at your report, again, for reliability purposes. They don't want any curveballs or any complications. So some rental properties, some property management companies only rent out to people who have good credit. And also, even if those rental companies, let's say that they're not that strict, that they'll rent out even if you have bad credit or fair credit. But what if you're competing against two other people for that same apartment? And then the other person has better credit than you or a cleaner report than yours, and they end up offering it to them because of that difference. Also, utility services, whenever you switch out in light companies or maybe your phone or your water company, sometimes they ask for deposits. And sometimes those deposits are refundable, sometimes they're non-refundable. So you're losing out on money. And the other thing too is with your phone plans. If you're trying to finance a phone, that can be the difference on being able to finance the full amount or maybe a third of it, half of it. Sometimes they just don't approve you at all if your credit's not there as well on the cell phone plans. And that pretty much wraps up everything I have to share with you. I don't know if there's any questions in the chat. Would love to hear those if you want to type those out there, and Erica will be able to manage that for us.
All right. Well, thank you, Emiliano, for that wonderful presentation. There's definitely a lot of benefit for using Savvy Money Credit Score. And one important key thing to also mention is that it does not hurt your score when you use Savvy Money and check your score daily. So that's a wonderful benefit. All right, we don't see any questions in the Q&A as of now. So we want to thank you for joining us today for our Savvy Money Lunch and Learn webinar. To stay updated on future webinars, workshops, and other events, be sure to follow Security First Credit Union on social media, visit our website, and keep an eye out for our digital newsletter delivered to your inbox weekly. Thank you so much for joining us. Until next time.